We're going to discuss advances, deposits, and unearned revenue. Now, advances and deposits, that's returnable cash deposits received by your company. So, specifically, an advance would be when a customer gives your company cash before you have performed the service to guarantee that you will perform the service. So, examples of advances are if you're a lawyer, so a retainer fee that you'd receive from your client, that would be an advance. So usually a service industry gets advances. So an advance received by a service industry company to help pay for the initial cost to get a project started. So let's say you're doing advertising costs, you're an advertising agency. Your customer may give you an advance, and that'll allow you to hire a director for a commercial or things like that you have to put money down on for that project. So that advance you receive helps you get that project going. So advances are usually considered liabilities because the advance could be returned to the customer if the company decides not to perform the service contracted, or maybe it just gets canceled, or maybe you decide you won't have time to be able to do that project, so you've got to return that money. So it's a liability. So what are deposits? Well, the best example for that, and it's similar to advances, is rent. So let's say you rent an apartment. Let's say your landlord requires a $1,000 security deposit. So just like an advance, you got to record that liability. So on your landlord's accounting books, they receive the cash for $1,000. They're going to record a liability and credit security deposits liability for $1,000. Now let's say you've been a pretty good tenant throughout the entire process and you're going to get your $1,000 back at the end of the lease. You'll get that cash back, so the landlord will cut you a check or reduce his cash by crediting cash for $1,000, but then he'll also be able to reduce his security deposits liability by $1,000, so that will wash out the liability on that security deposit. So these liabilities can either be current or long-term, depending on the length of the contracted terms. So that's advances and deposits. Let's look at unearned revenue. It's kind of similar in theory, and that's why I put them together in this overview. But unearned revenue is payments from customers before the delivery of goods or rendering of services. Sounds similar to advances, sounds similar to deposits, but it's slightly different, and let's go through some examples. So an example of season tickets to your favorite sports team. So let's say you go out and you buy tickets to the university basketball team for $240 for the year. So if we were to look at the university's accounting records, they're going to record that cash that you paid them of $240. So they're going to debit cash, and they're going to credit the liability of unearned ticket revenue for $240 because they haven't played any basketball games yet. You've bought those season tickets, but if something like COVID-19 happens and the season's canceled, you would get your $240 back. So that unearned ticket revenue could potentially go back to the ticket holder. So let's look at the balance sheet right now of the university. They've got cash of $240, so their total assets are $240. They've got a liability of unearned ticket revenue of $240. So our balance sheet balances. And they haven't reflected any income yet because we haven't played any basketball games yet. Let's assume the basketball team plays 12 home games, and that's what you're going to, home games. So each home game will represent $20 per ticket, or $240 divided by the 12 home games is $20 per ticket. So after home game one is played and you went to it was a great game, the home team wound up winning, yay, university. The university can reflect that ticket revenue income of your ticket sale. So now the university can show ticket revenue of $20 being credited and reduce that liability, that unearned ticket revenue, by $20. So if we revisit the balance sheet, they still have that $240 cash. And again, we're assuming here that no other expenses or anything's happened. They just went out and played basketball. They now have reduced their unearned ticket revenue to $220. That's the $240 they originally received, less the $20 for the first game being played. And they now have net income of $20. Well, where did I get that net income? Well, on the income statement, they're able to reflect that $20 after that first game as revenue, which now is their net income. Net income flows to our equity line, so our balance sheet is back in balance with $240 on the asset side and $240 on the total liability and equity side. So some other examples of unearned revenue: magazine subscriptions. You order Sports Illustrated magazine, it's an unearned subscription revenue for Sports Illustrated. So they'll record it as a liability, and then every time they put out a magazine, when it's earned, they'll actually move some of that money out of subscription revenue and in unearned subscription revenue and into subscription revenue. Airlines. When you buy an airline ticket, let's say you buy it 3 months in advance. Until that flight happens, it's unearned ticket revenue. But once we get to the point where you're jumping on the plane and flying off to whatever place you're going to go, they can then record that officially as ticket revenue. A restaurant, let's say you want to buy a friend a gift card so that they can go back and enjoy that lovely restaurant of yours. You purchase it, and on the restaurant's books, it's an unearned gift card revenue. And then when your friend comes and uses that gift card at the restaurant is now able to record that as sales revenue. So those are a couple examples of unearned revenue, and it has different titles. But at the end of the day, remember, just because it has revenue in its name does not mean it's revenue. Unearned revenue is a liability that is on the balance sheet. So I hope this discussion helped you understand advances, deposits, and unearned revenue a little bit better. And please like this video. Also, comment down below if there's something else you'd like me to discuss or lecture about auditing and accounting. And please remember to subscribe.